Hello, I'm Greg Bell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights to help boost your trading potential. Coming up, tariff uncertainty continues to weigh on the markets. Wall Street's watching closely as the Fed kicks off its first policy meeting since the U.S. administration's tariff announcement in early April. Investors are eager to hear how Chair Powell interprets these latest economic signals that we've been getting and what it might mean for interest rates. Plus, a head-to-head battle over DoorDash following the news of two multi-billion-dollar deals, one of them that will see the company grow outside of the U.S. Our trader debaters are standing by with the bull and bear cases. That's all ahead. You're watching TD Active Trader Live. All right, let's check in on the markets. We'll start with the S&P 500. We had a nice little winning streak there for a while. It has cooled and paused as we await, of course, Jerome Powell tomorrow coming out of that two-day Fed meeting, which begins today. And they've preached and preached and preached patience on rates. TD Securities actually sees a hold from this meeting with a cut coming in potentially in June. Want to check out the heat map and see what's moving beneath the surface right now. Got a lot of red on the screen right now. Nothing too dramatic through the tech space, except Palantir, which may be hiding somewhere in here. If this is the 100, no, this is the 500, it's hiding somewhere in there. I want to take you to Palantir and show you what's going on there. Good, but not good enough. The stock's pulling back double digits this morning. So here's what happened. The defense tech company came out. First quarter earnings were in line. They raised their earnings forecast. You think not so bad, but the stock had gained 63% ahead of earnings this year. And of course, it had a fourfold move to the upside last year. So one of those price to perfection names, and perhaps no protection if you don't have a great quarter on your hands. Interesting one to watch and definitely giving back some today in the early going. Also want to check in on Ford. The stock's not doing a lot right now, but an interesting story behind it. They're suspending their 2025 financial guidance, citing near-term risks, especially industry-wide supply chain disruptions because of tariffs, the potential for more tariffs, just a lot of uncertainty there. And so the math is a $2.5 billion impact from tariffs this year, but they think they can offset that by about $1 billion of those costs. So you get a $1.5 billion there through their math. Ford actually beat Wall Street's top and bottom line expectations for the first quarter. And so another interesting one to watch as we try to figure out the impact of tariffs on our everyday lives and our investments. And that's your market update. All right, joining us now for a more technical take on what is happening out there. Here in Amin, Jason Maddock from our direct investing team. Gentlemen, lots going on. There's always lots going on. Luckily, we got the tools to dig into it with the platform. Where do you want to start?
Yeah, let's start with triple Qs. You saw the red on the screen there for a second. We're going to look at the triple Qs, which is just tracking the NASDAQ 100 or composite index over here right now. Parse through some of what the data is showing up. So here's what's unfolded so far with the AI space. As you mentioned, Greg, we've had a storied run on the S&P 500, 9 straight days of wins. Not seen since 2004. Hasn't been the same story on the Qs though. However, they've nearly recovered about 65% of the losses that they suffered since mid-February. This is going back when we go back to the highs. I got the chart up here. So we're slowly trickling up here. We had Microsoft and we had Meta come out with earnings. Big reaffirmation numbers came out strong, but CapEx also, both of them said we're going to be increasing our CapEx spend in the AI space. So again, key drivers coming in. This week, we've got NVIDIA still coming out 2 weeks from now. AMD is going to be on the cards today. But what I wanted to look at the chart was, there was one key thing that I looked at. We just saw a downtick here today, and it's kind of hard to see. We haven't fully formed the pattern over here, but we just see sort of a doji candlestick form over here. But one thing I noted was we've got the gap fill area. And my feeling is that we might even get that gap closed here. This is the 475 level that needs to capture down. So it's about 5 points it needs to close down below today. And that's going to complete the gap, at least on this point. But it's also created another gap on the upside at the open, of course. And then we'll see if the upside holds it. So key levels right now to watch are there on the upside. If we do break to the 490, we could see some momentum building up. It is still below its 2-year bullish trend over here in yellow, which I've marked here. So there's still a bit of room for it to push up before we're back resuming that trend. But on on the downside, we're looking at this 465 support over here on the downside at the break of this large green candle once we had the tariff pause announcements happen. So that's another key level to book. If it does fall below that, we should see some more pressure. On the earnings story, though, I wanted to just mention that one thing before we wrap here was on the Qs. Earnings is now running at 12.8% growth for the current quarter. That's up from 10.8% the prior week and 7.2% for the previous week to that. So earnings are actually guiding up. And maybe this is just Wall Street being a little bit more pessimistic coming into this, where we're seeing that numbers. So it'll be interesting to see. We saw what Al Palantir had to say. AMD is also another data center miner that we'll see a little bit, which I'll speak about a little bit more today.
So that's the Qs. What about this U.S. 10-year yield? I feel like I haven't paid much attention to it lately.
No, we haven't. And it's, let's bring it back into the conversation here. So I've got the charts pulled up on the 10-year yield. And again, just for our viewers, reminder, the 10-year Treasury note is a vital sort of gauge to look for influences equity valuations, but also long-term borrowing costs in the United States, of course. And this is one where the administration and the Fed have gone to a little bit of I should say more on the administration side. There has been some, pressure on the Fed to push some of those interest rates down, which could impact this. But here's what's happening so far. Right now, we've seen the yields. One thing I wanted to mark was we saw this big spike up in yields. We saw the big drawdown come to about this 38 level. Now we're looking at TNX, which is just sort of a index that tracks the yields. So right now, you want to interpret this as just divided by 10, and that's how you get your yield numbers. But ever since that when those tariffs kicked in, we saw yields really spike, and I've noted it on the chart over here, almost up to 4.6%. And this was the pressure point at which we saw that the tariffs, the pause was brought on, okay? So we know this is kind of a bargaining tool. In fact, there's a few commentaries. Japan had come out. Finance minister said that the U.S. Treasury holdings could be a card in the trade talks. We know that. It's obviously evident here. So Japan, which is the largest holder of U.S. debt, may be using some of that as a political, bargaining chip as they get into these trade discussions. We know China is also the secondary debt holder as well as part of this. But also, again, Scott Bessent made comments just coming out of the weekend saying that, 2-year treasuries are now below the Fed fund rates. And if anything, the Fed has now, should be drawing those, bringing those rates lower. So again, this is one to keep an eye out on. It is inching up, though. We're getting to that 4.44 level or 4.4% level. This is the level to watch. If it starts breaking above that, it hasn't really held before that. But if it goes above that, we could see some, again, more pressure, volatility being brought in the markets as the yields start to creep up. I think ideally we want to see it come down to that 4.1 or 4.14 level is where the support is going to be sitting at there. So that's one to keep an eye on and see what the news unfolds as, as if there's going to be a sell-off or if this means there's going to be more bigger bills for Washington's interest that they're going to be paying on their debt.
April was a choppy month for so many asset classes. I'm looking at Bitcoin. I know you're looking at Bitcoin. And I think if you overlay that on the S&P 500, you pretty much have a nice little correlation going there. It's the big drop off and then basically back to the beginning of the month levels. Exactly.
So Bitcoin is definitely a risk-on asset depending on where you sit on the curve. Some consider it a digital store of value, like likening to gold, digital gold essentially. But some of the big news that's coming out of that's spurring some of the bullish momentum on Bitcoin has been a couple of things. So we know MSTR, MicroStrategy, is a big has pivoted their business model to accumulate Bitcoin, and they just did a big round of purchase that just came out there. But also on top of that, we saw big inflows from U.S. Bitcoin ETFs. These are spot Bitcoin ETFs, I will mention. About 1.8 billion in the week ending on May 2nd, and 2.9 billion as of inflows as of April. So just looking at the May numbers, that's a significant chunk just in the first week alone that's come out. From if you look at the April comparisons there, some of the big developments that are coming out. There's the Bitcoin Act is still in play. And it's the role where, at Capitol Hill, they want to be, administration wants to acquire Bitcoin, accumulate, I think it's about 1 million is what they're looking at over a 5-year period, and have a 20-year holding period on that. And if that can pass, then again, that's going to significantly influence it. Trump, the administration, I should say, recently just came out again this weekend saying, I want crypto. Crypto is important because if we don't do it, guess who will? China. So that's another one to look at. The levels that they're trying to capture right now is going to be this 98,000 right here, which has to break through. If it can break through that, It's also going to buck this sort of downtrend, and if we can push a higher low, then we could push up to that 100,000 level at the next point here. But again, 92,000 is another support here where it's just kind of teetering on right now, sitting about 94,000 today. So 92,000 is going to be the next support, and possibly from down from there is 88,000. But the all important thing is it's still holding on this short-term uptrend that we're looking at, and we're seeing RSI coming a little bit weaker now. It didn't go quite into the overbought territory, but it just snaked back in. So we'll see how that shakes out.
Interesting stuff. And Jason, just when you thought it was safe to go to the movies to escape the tariff noise, the summer, the threat of tariffs on the movie industry.
You're right. The summer movie blockbuster might is up in the air right now. But who could blame Warner Brothers? They're riding high. They had 2 of the top 3 domestic box office draws. We're talking in the Minecraft movie as well as the movie Sinner, bringing in net of $600 million of box office receipts. So once again, even with the price being in towards the bottom range of the 52-week range, who could feel bad or could blame Warner Brothers Discovery for feeling good about themselves? And this was before the tariff news. Analysts were expecting that they had very little exposure outside of some of the Roku devices to kind of those broader scope tariffs. But then we had these the big announcements from the administration around 100% tariffs on foreign-produced movies. Now we're still waiting for more information to come out of that. So understandably, there's still a lot of confusion, ranging from bewilderment to skepticism to really kind of understanding how this is going to play out. But if we're thinking about Warner Brothers and as well as some of the other big players in the space, Netflix, Disney, Amazon, they've all seen them trade off since Sunday's announcements. Now, a couple of things I want to, and actually Warner Brothers actually has earnings coming up later in the week, so a couple things I'm really interested to hear about. Now, Warner Brothers does have a really extensive IP catalog, and they've been doing a nice job of marketing some of that, from DC to some other big names. But some of their competitors have now done a really nice job of creating their own in-house IP, so lessening the need to actually go out and source it from somebody else who could be profiting from it. So that'll be one thing I'll be listening for. Another thing we're thinking about is going to be that movie theater experience. That's an ever-changing dynamic. So we're interested to see how they're going to be projecting that going forward. But jumping into the chart just quickly here, the last 3 earnings events out of Warner Brothers Discovery, we've actually seen some pretty extensive trade-ups in the price. So we're really interested to see if that'll be able to continue. And then I want to kind of zoom in on kind of where we're at currently, because the stock is broken down below kind of the 870 level, below kind of, it's been a bit of a tipping point, so it's been acting as a bit of a glass floor. Now we're looking like it could be in terms of a bit of a glass ceiling. We had the stock trading up off of its lows that we had over the period, bouncing off the 870 lows, so it's one of those things that we had a death cross earlier in the year, and now even nearer term, the short-term 21-day moving average really does look like it's kind of acting like a resistance point right now, continue to guide it lower, but lots of information still to come out from the administration, and we've got earnings, as I said, coming up on Thursday, so we'll be interested to see if the downtrend is going to continue.
It's the kind of thing that threatens my favorite game when I'm watching a movie or a show. I'm not going to plug anything, but I'm watching a show about zombies, and there's mountains, and there was the Rocky Mountains in Canada. It's like, and there's some in Alberta, some in BC. It's a fun game, right? It's like, hey, check that out.
Yep.
Right, so we'll see what happens. Thanks for that, gentlemen. If you have a question for us and our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. You can find more information about all of our trading platforms under that Get Started tab, so you can find the one that's best suited for you. And if you're interested in trying out the TD Active Trader platform risk-free, you can open a practice account by clicking here on the Try TD Active Trader button. Whether you're a new or seasoned investor, TD Direct Investing has you covered and has once again for the 3rd year in a row been ranked as the #1 online brokerage in Canada by the Globe and Mail. It's time now for trading and debating. The stock of the week in the spotlight is DoorDash. Before we get going with the debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Option trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Now let's get back to the stock of the hour. DoorDash, guys, usually ask you what made you pick this stock. I just want to talk about some of the behind the scenes. I mean, these guys are cool as cucumbers, right? Anything you throw at them, there's no problem. We picked the stock because DoorDash was supposed to report in a couple of days. Well, DoorDash decided, hey, why wait? Let's throw the earnings out before their show. I'm sure it was all about us.
Yeah.
You guys have managed to pivot. We're still going to have, we got a lot of news around the name, too. I know it changes your strategies a little bit, but we got some news around the name today.
Yeah, we do. We do. I mean, it's a good thing because if you've been following the show, we pitted its closest rival, Uber, not too long ago, and so now it's good that we bring, its competitor Dash into the picture over here in the food delivery business, and just look at it and see how it fares. It's operationally it has presence in 30 countries, so we'll see how it stacks up against Uber.
Yeah, and they are the big player in the industry, and they do bring a lot of innovative technological solutions to bear to answer their problems. And it can be, depending on what side of the equation you're on, if you're a restaurateur or if you're a consumer, it could be mildly divisive depending on which side of the argument you're on as well.
When they first burst on the scene a while back, I could only think DoorDash jeans. Brooke Shields, that tells you how old I am. When someone said, hey, have you heard of DoorDash? I went, what, DoorDash? I was like, so there we go. We've cleared the air there. We're going to get some time on the clock. 2.5 minutes, both to make your case. Then you give us some time to counter. The clock is up on the screen. You guys can see it too. There you go. So we'll keep you honest. Jason, you got the bear case.
I got the bear case. All right. So full disclosure, a lot of this argument was put together before today's pullback off earnings, but I still think the argument holds. There's three things that I kind of want to lay out as the bearish case. First is going to be the overall economic health and the broader economy in terms of disposable income. Next is their fee structures and how sustainable they can be. And lastly is going to be around kind of the overarching employment legislation that could be playing into this. First of all, Dash itself isn't negatively affected, but in terms of a first order tariffs. But when we start looking out beyond, when we think about, as I said, disposable income, they're reliant on the health of the consumer discretionary spending sector and the broader economy. People are still going to order for themselves. They're going to get their pizza, they're going to get their sushi, they're going to get their subs or whatever they happen to get, or even the groceries. But there's not one time when money gets tight, there's an opportunity to go do it yourself. Save some money on that. When we start thinking about debating about making expenditures, that's going to be a logical solution. The next, let's stop and think about how DoorDash makes some of their money. Outside of their Dash Pass, some of it is not always going to be as projectable into the future. Their fees, they're heavily dependent on fees and continuing to choose Dash as their primary choice when there's other competitors. Morningstar's got this rated as a very narrow moat for that reason because there's other choices. And if it's a race to zero in terms of fees, if somebody's just going to undercut them, we're talking about restaurant commissions that can be passed along to the consumer to drive up prices of up to 20%. Then they have small margin. Delivery fees, service fees, small order fees, all of these things can be undercut by your competitors at a moment's notice. And lastly, we've got gig workers. Here in Ontario, they've already passed legislation. There's things that are brewing in the US to see that might make a big change. But let's jump ourselves into the chart so we can talk about price action. Now, undeniably, the stock, outside of today's big gap down, there's been quite a bull run over the last number of weeks and months. But one thing that's kind of brought me into is all about timing. When I think about kind of nearer term trades, what we can see here after they made their recent 52-week highs, what's the definition here of a bear trend?
You're gonna make him make your case for you? Oh,
lower highs and lower lows. We can see over the last number of weeks those have been pinning across, and there's other confirming information that's coming along with it. You mentioned doji candles on one of your other. There's also been a lot of indecision in those when those peaks have been coming off, so we can see lots of indecision in the market. Wondering if the stock that overvalued nature with sky high PEs and that may not be worth. And the last thing I'll mention, as we've got time here, is we've got potential double top.
Interesting you mentioned time.
Yeah. Clock yourself up.
As we got
Jay.
time here?
No, I do not. But the chart speaks for itself if we go that way.
All right. So they jumped forward with earnings. There's a market reaction right now. You got the bull case.
Yeah. Interesting. Obviously, interesting argument that you made, Jay. So what I'm going to start by saying is DoorDash does have a compelling bullish case behind it. They're looking to capitalize on an explosive food delivery industry that stands at $365 billion. It's a household name in food delivery, but also comes with brand recognition. And here's some of the standout things. Market share. It stands at 67% of U.S. Food delivery market share. And if you look at its nearest competitor, Uber, it sits at 25%. Yeah, now remember, Uber's been in the business longer than DoorDash has as well, mind you. So if you're craving those late night taco cravings or those overpriced salads, that's probably where you're going to go to is DoorDash, right? A nod to Cinco de Mayo that just passed, yeah. Other than that, we also see just on a fundamental side of it, they've been on the up and up. They've been generating double-digit revenue growth, but they also are on the path of profitability. Yes, they were sort of in a hyper-growth phase, so they did come out of sort of negative earnings, but that has now turned positive and evident as, of course, as of today. We saw a profit of 193 million, 44 cents on the EPS, and top line numbers surged 21% to $3 billion as well there. Also, you've got a pristine balance sheet, debt-free. Okay, so for a company that's in the hyper-growth phase to not take on debt, it just makes me question, like, what is the possibilities that they could have if they did take on debt to fund and do the acquisitions over here. So that's another thing I'm going to look at. The other key metric that when you look at the food delivery business is something called gross order value, GOV. So Dash has 80 billion gross order value. Uber sat at 75 billion, and any competitor near them, Grubhub, if you think of Just Eats, they're a fraction of that number there. So just on that scale alone, we know Grubhub has got those customers, and it's keeping those sticky customers as well with what they have. Let's go into the charts though, because I do want to paint a picture, because we obviously had earnings come out. It's on some certain news. But I'm looking at the weekly chart right now. I've got pulled up here, and you can see one of the big things is there was this big trend that dates back to about 2 or 3 years, this bullish trend, and it's actually broken out of the upper bullish band over here. And it's kind of squarely sitting on this support, which sits at the 178, but we're still above the 3 EMAs. And on the weekly chart, you're looking at the 13, 26, and the yearly. So we're still in positive bullish momentum territory right now over here. And I'm just going to switch over to the daily as well and just show you what patterns coming out over here, because we've got a W pattern, which is sort of the wins. Now, it's obviously broken through today. So we've got on the daily, we saw the upside breakthrough coming out here. We're just going to test that 192 level to see if we can get that positive momentum.
All right, there are the cases. I know you guys still have a few points you need to make. That's what the counter is all about. 3 minutes on the clock. We'll give Jason the first word, but you don't need to be polite here.
All right, let's counter Heron's W with an M on the chart. So let's go back to that. I really want to speak to that because we can see that the resistance point that was in place, I had it tentatively drawn on my chart, which is the dashed line. It actually held with today's news. So we've got the forings of a double top that's coming into play, which could push, if we do see this come to fruition, if we can see this break below the 170 level, we could be then seeing prices drop back to the 150 level. When we're thinking about a hyper-competitive company situation with all of the other players in the space, you've got investors that have rode this all the way up, that it doesn't take much to start kind of needling themselves towards profit taking, where we've got, it's an opportunity to lock in some gains when we've got when we've got the profit in the bank, we can continue to move on and look to see if we can maybe re-enter at a later space. Yeah,
but you know what? One thing you're missing, Jay, is like if you look at the charts again, and yes, granted, they came out with earnings again, not bad earnings at all. The big drivers of the price today is the acquisition piece. Anytime a company does an acquisition, we know, the acquiring company tends to drop in price, which might be part and parcel of that. They did a 1.2 billion acquisition of 7 rooms, which is a CRM in the hospitality industry. But second of all, you've also got a market that's red today. All right, so that's adding to this. But here's what I'm also looking at on the charts: is anytime you want to see a push in a different direction that's going to buck the trend, is you want to see a strong surge in volume. And I'm not seeing that right now. There's absolutely barely any volume on this push down right now. Now, granted, the day's still young, but unless we see a big surge in volume, we don't see conviction in this story here. The other thing that I'm going to also mention is just on the drivers of their growth, because you talked about they're kind of diversifying the revenues. Yes, it's about the food business, but they're getting into other verticals like like going into groceries, which is a big driver. That one of their key strategies is going into these suburban areas and targeting these smaller cities where they can capture the grocery delivery business, partnered with like Walmart, Albertsons, and it's the biggest growth driver right now that they have in the grocery business. In fact, the numbers are sitting at, let's see, what do I have over here? We're seeing about 100% year-over-year growth. And one of the other statistics behind this is they did a statistic to see how many people are actually using this. Because you mentioned, people might just, they would save a few bucks. They might go and just pick up their own food or their own groceries in this case. But the stats are showing that 1 in 5 Americans currently do order online on a regular basis, and that number increases if you're going out to a monthly basis.
And some of those people might have signed up for their subscription service, their Dash Pass, and that's that projectable nature that long-term investors are looking for, that repeatable revenue. But guess what? The stickiness of that Dash Pass isn't really coming to play. When we think about that renewal of that retention, it drops below 50% after 3 months in terms of recency data. And when we think about out to 12 months, it's only about 20% people keep renewing into that. And they've also partnered with Chase. I know I'm trying to talk about good things here. Yeah. But when we think about offering... offering up Dash Pass for free, that's cutting into their revenues.
Yeah.
All right. I was pulling up a story about some of the deals this morning. It's $5 billion in total. It's 7 rooms for $1.2 billion, and then a British outfit called Deliveroo for $3.9 billion, which they are getting a bridge loan for that acquisition.
So they're taking
as well, of $2.85 billion. A lot going on, but. Yeah,
Deliveroo sounds very Australian, not British.
Yeah,
so
that's not British at all. But
Deliveroo. You should be in marketing. All right, there's the arguments. There's the counter. If you're going to play this through option strategies, and here's where it got interesting for you guys because you had strategies ahead of earnings land, big deals. Yeah, of course you pivot. So who wants to start?
Yeah, I'll start. I'll take this one away. So I had initially, intended to do a strategy where I was going to be kind of trying to game the cyclical nature of Dash's trades. They've historically seen pullbacks through the summer months as delivery business the numbers go down. But with the big pullback in today's, I kind of blew through kind of the shorter strike that I was going to complete. So what I wanted to talk about this time was now thinking about an easier position to defend, something that's going to be a little bit shorter in time frame, and one that I'll be able to do and execute in one strategy and understand that I can project with more projectability where the price is going to be over a shorter period of time. So jumping into the option chain, I'm thinking about, in this case, writing a bear call spread. In that case, we're going to be thinking, you want to try to manage our time frames. In terms of weekly options, we can go out to 45 days. It's not uncommon for when we're talking short options to stay, 30, 45, maybe as long as 60 days. But anything more than that, you're maybe leaving a little too much time for, time to be wrong in this particular case. So when we're thinking about selling short options, we want to think about, our goal is to have them expire worthless. I like to just take a quick look at the deltas to find something less than 30 as a starting point, and then I kind of adjust off that in terms of making sure there's enough premium in the trade to make it so there's enough meat in the bone for me to do the trade. What I've kind of settled on was selling a 210 call, and then going ahead and, because a call, if I just sold the call on its own, there'd be unlimited risk to the upside. So pairing that with a long 220 call, that's going to give me a $10 wide spread. I'm taking in this particular case, it's $1.52. It was a little over $2 before we started rolling on the show. So it's kind of eating into the profit a little bit. So it's something I'll want to keep an eye on. But it's giving me the, if we can we're still sitting in a very likely chance that it's going to expire worthless and out of the money. There's only like a 77% chance that it's going to test that strike. So I'm feeling good that I'll be able to capture premium, account for maybe a bit of a bounce back after today's big down move, but still give myself room to the upside to make max gain if we don't, if we do get tested on the upside.
That spread where the risk is on this one?
Yeah, the spread's where the risk is. So that's when I'm teaching these in our master classes, I always want to identify what the width is. So this is a $10 wide spread that tells me what my max loss is, but that's going to be, I'm taking in right now $1.55. I ideally like to maybe hold off and see if I can get over $2 to make that risk reward ratio a little bit more in my favor. But the max loss is going to be the width of the spread less the premium you take in at the top of the trade.
All right, here, and how could a bull possibly play this?
Yeah, so we're going to do, looking at, I had to obviously adjust the strikes on this one, of course. So, and again, speaking to Jay's point, coming into a sort of a volatile period, whenever you go long a trade, the premiums are going to be cost is going to be a consideration for most traders. The trade I've got is a broken-winged butterfly. All right.
Broken wing butterfly.
So,
I think this is the first for the show.
Yeah, broken wing butterfly. We usually keep our wings intact, but this one we broke it. So I'll just explain what it is. So I've got the chart pulled up. Essentially what it is we're doing a debit spread and then we're tagging on a credit spread on the other side of it. So what you're going to see here is just adjusting my strikes since it's kind of meaningfully come down. I'm going to go pretty much right at the money on buying the 185 call. And we're going to be looking to sell about 15 points above it, which is going to be the $200 strike call. Now, we're selling 2 of those, which creates the body of the butterfly. And then, this is where the broken wing comes in. We're going to be buying the 210. Now, the reason why it's a broken wing, Greg, is because usually in a butterfly, you have equidistance between your spreads. So in this case, I have a 15-point width on my debit. But in this one, I have a 10-point width on the credit side of it there. Now, the reason is, why did I go with this? Well, part and parcel was, we looked at those levels where you think the price can sort of come to a rest, at least based on what the drawdown is right now, and also just to improve kind of the overall profitability of the trade. So I've got the trade pulled up. It's the June cycle that we chose. Right now, the price, we're looking for an entry of about $450 on this trade. That means the break even is going to be about $189.50. All right, so we need the stock to get to at least $189.50 by that June expiry. Our max situation is if it can get up to 200. We need to hit that golden spot on that 200 level. I know a question you'll always ask me is,
what's the risk? What's the risk?
What's the risk and what's the profit? Okay, so I want to just pull up my risk profile over here. So essentially what the risk is going to be just the downside. All right, so if the stock moves even further below that 185 level and remains there, if we hold it close to expiry, we're going to be out to $4.50. In other words, $450 on a single contract. The upside, of course, is if we can hit that sweet spot at just the 200 right over here, which is on the risk profile, then that will give us our max gain, and that's the spread, which is $15 minus the 450. So my math's a little bit rusty, but 1050 is what our gain is, so 1,050. But then what you tend to see is if it starts going even higher than the 200, it starts giving us a little bit of diminishing returns. We're still in the positive, but we get to a point where we're pretty much breaking even to the point when it does cross below that 210 threshold that we have on the upside. So that's kind of the trade to set it up there on going out 60 days, seeing how it shakes out.
Interesting stuff, gentlemen, and I personally am very impressed. These guys had to pivot on a dime this morning on the way in on a train when we got the news that they had already reported. Did a brilliant job.
Thank you, sir.
Thank you, sir.
Thank you guys for laying it.
Do it for the fans.
Cases. Do it for the fans. You got to roll with it. That's the markets, right?
Yeah.
You got to roll with it.
Yeah.
That's the bull and bear case for DoorDash. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, you're going to run through the scan tools.
Yeah, we're going to use the scan tool today. It's one of those kind of really neat tools that the platform has. That's you want to cast a net out in the ocean, see what you can catch. It can be a very broad net. You can scoop up as many selections, or maybe you want to really narrow that down so it's focused on a few key specific elements that you're interested in. So let's jump into the platform. I'll show you exactly where we can do that and how we can really kind of make it our own. I'm already on the scan tab. It's a default tab here in the platform. So let's start working through. And I want to first direct everybody's attention to the top of the scan tab. It's pretty interesting here. You've got this scan in where you can scan and be very specific what you're looking for. We're going to just leave this at all stocks, but you can also scan for options as well. And the one that really kind of brings it home is that we have this drop down that says intersect with. We can either intersect with specific watch lists that I've created for myself, or we can scan in particular indices, or we can get in very narrowed sectors to really kind of find, to really define what we're looking for. Before we go to public and we just run this across, let's just say the S&P 500, so we make sure we get a number of choices. All right, let's now run through and adding some filters into this. We've got one filter already added in. We talk about death crosses and golden crosses and all sorts of looking for those events. Well, guess what? I can have the scanner find those for us as well. If we go down to the study selection, and under study, we've got all sorts of different technical indicators here. If we go moving average, this is where we're able to set up the moving average. We've got a 1 candle day period. If we want to look for something maybe a little bit longer term, let's say we want to find out what stocks are trading above their 200-day average, we're going to be putting in that $200 candle count, and then we can then start filling in the blank. We're going to make sure what we're scanning for is the 200 is going to be less than the the value, and in this particular, actually that's not the case. Then we're going to choose stock, and in that case, we're going to choose the mark. The mark is down towards the bottom. Let's get down. There we go, the mark price. So we've got that on the right hand side. You can see there's 198 stocks that are trading over their 200 average on the S&P 500. You can continue to add in other filters. Let's just add one in for additional information. If we go ahead and just add in stock information, one that's always you want to make sure that the stock is trading with good volume. Let's see if we get with our volume average. Where are we at here? There we go, volume average is right towards the bottom, always the last place that you look. And we say volume is greater than, let's just maybe do 500,000 shares as their average to make sure. Now this is the S&P 500. There you're gonna expect to see lots of different companies that have that average. Okay, we're all set and ready to go. We can run our scan at the bottom of the screen. There's our matches that are coming through. Now, quickly, what we want to do to make sure we can get a little bit more out of this is we can actually add in additional columns. This hamburger menu that's on the top right-hand corner of where the scan results are, if you choose columns customization, this is where you've got the opportunity to kind of really personalize this, and we can actually bring in that moving average just like we thought. If I bring it in and drop it right next to the last trade price and hit apply, now we can actually cross-reference to see how closely, how much further above the last trade is, so you're able to get a sense of how long that bull trend is, and really start to narrow down your focus. Last thing to show off, if we go back to our hamburger menu, you can now save these scan results to a watch list, so you don't need to recreate the wheel every time. You can go back to your personal folder in your watch list. You can always keep an eye on this, and you can then start sorting and scanning from these as well as your criteria and as your priorities change over time.
All right, another powerful tool on the platform. Thanks for that, Jason. If there's a stock you at home want to see our debaters go head-to-head on, send your suggestions at td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. If you scroll down, you're going to find a tab that says Join a Live Masterclass this Wednesday, 2 p.m. Team is hosting an interactive session about TD Active Trader, which can explore all the main features the platform has to offer. Registration is required and is open now. Before we wrap up, as always, what is ahead on the radar? Eras begin, they come to a close between shows. I'm thinking of Warren Buffett saying he's stepping down seismic. And that was just like, between two shows. What do we got coming up?
Yeah, the other one that's going to be seismic is tomorrow. The FOMC meeting. Fed Chair Powell is going to be at the helm. 2:30 is the press conference. Of course, 2 o'clock they will release the numbers. Wide expectation is they're going to hold pat with the rate, keep the Fed fund rates between the 4.25 and 4.5 rate. But what's interesting is I always view this as like the earnings for the Fed. You're not so much worried about what the numbers are. What you're worried about is what is the expectation going, or what's the guidance essentially they're going to give forward. And so just some of the numbers, we talked about June as the next meeting that they have. Right now, the CME Fed Watch tool has the probabilities actually in fact cut. It was 55%, which has now dropped to 36.6%.
Really?
So possibly June, it might be another one where they're going to hold a pause, where July is now in the picture there. So that's one we're going to keep an eye out and see. Again, for investors and traders alike, this brings about volatility when that announcement will come out tomorrow there. We're still on pace. The Fed Watch tool still has 3 cuts on the slate for 2025, so we'll see what shakes out. But other than that, I mentioned at the top of the show, AMD is coming out with earnings this evening, all right? So this is another play, maybe a sympathy play of what might be unfolding with NVIDIA in the overall AI space. Microsoft has some good numbers. They increased CapEx spending. AMD is a little bit of a different business model. Their revenue is heavily dependent on the CPU business, but they're also making a headway into the AI space. And one of the big notable things is they did an acquisition in late April for $4.9 billion of ZT Systems, which is a maker of hyperscaling servers as well. So what the expectation going into this earnings will be, like EPS is 94 cents, revenue of 7.13 billion is the expectation. We'll see what the guidance is going to be on the AI center. On this chart, it looks pretty dreary on this chart and glum. It has been on a significant downtrend. However, you can see on this downtrend, AMD's just started poking above the upper bound of this downtrend over here, starting to breach above the 50-day EMA that we have in place. The EMAs are still in a bearish tone, so we want to see some positive momentum. It's also forming this ascending triangle, so we want to see the break above the 105. If it does have sort of a blockbuster guidance that they give out and it's all rosy, then we might even see a push towards the 115 level there. But that's the one we want to keep an eye on for.
And you're taking a look at?
I'm taking a look at Monster Beverage, right? So here we have a $10 billion industry, and that's quickly approaching maturity. We've started to see consolidations in the space with Monster's purchase of Bang a couple years ago. You mentioned a couple shows ago about Celsius acquiring Alani. But Monster itself is the number 2 beverage with a market share of about 28% behind Red Bull, just ahead with about 37%. Monster itself saw about 4.5% increase in their Q4 earnings last time around, and they've been very aggressive. And this is really kind of what caught my eye with their promotions and their branding deals, right? We already know they've got deals with UFC as well as F1. The big fan over here to my left. But they also announced a partnership with AS Roma, the soccer or football, whatever side of the argument you are on there. Big partnership with them. But all is not sunny for Monster. It seems like tariff seems to be the repeating thing here. Well, 90% of their beverages are sold in cans, so the aluminum tariffs.
Right there, right?
So we've got a big thing there. And then while Monster doesn't directly market to children, we've seen rotations in Europe where they've limited the sales to children under the age of 16. So with the administration's Make America Healthy Again and RFK Jr.'s focus there's some uncertainty whether or not that could apply here on this side of the pond. All right, but let's jump into the chart. A couple things that I've noticed here. We've since last earnings, we've been trading on the top side of the Bollinger Bands, strictly in the bullish zone. We have seen a recent MACD cross, so that's another indication leading earnings of some bullish tendencies. But let's jump in a little bit closer here. What we're also noticing, we've seen if we then switch my studies over from the Bollinger Bands over a little bit clearer here, we can see there's we talked about finding the crosses in our moving average. Well, Monster had a golden cross when they're gapped up on earnings. They did trade down towards kind of the $54 support, but has bounced off a big giant candle stock is trading up almost by a third from its year lows. So on a nice bullish trajectory, but we'll have to wait and see how the market's feeling after earnings come out on Thursday.
All right, another big show under our belts, and until we meet again next week. Thanks, gentlemen.
My pleasure. Thanks, Greg.
Hopefully next week will be less dramatic on your
Yeah.
way in. That's our show for this week. As always, investors should perform their own due diligence before trading. Thanks for watching.